is Rossana Bellina. I'm special counsel in Interalison. I'm part of the finance team. I regularly advise on large corporate financing for companies operating in Australia. I advise either the borrower or commercial lenders, investment lenders, non-bank lenders, all different types of actors, and also in all different types of industry: agriculture, luxury, sport, entertainment, construction, real estate. We do it a little bit of everything. When I say company operating in Australia, what I mean is that there are some financing where there is a company based in Australia, operating solely in Australia, or there can be some foreign elements. What I mean with foreign element is that sometimes there are companies based in Australia, but that they have some affiliates or some collaterals that is in a different jurisdiction. So in this case, we help through the support of specialized foreign lawyers to get the security over the collaterals located in the other jurisdictions. Another situation can be that there is a complete foreign transaction. So there is a foreign lender, foreign borrowers, but some collateral is located in Australia. So in this case, we help getting the security over the collaterals in Australia. Or it can be that there are some companies that are willing to enter the Australian market. It can be through the acquisition of a company or opening a branch. In this case, we work with the other teams in our firm. As mentioned, I'm part of the finance team, but Interalison is a full-service law firm. So we have M&A team, tax team, FIRB, regulatory, IP, even AI team. We have everything, and also in each state and territory in Australia, which means that when a company accesses the market, we are able to help them in every single aspect. So this is my experience at Interalison in Australia. Before coming to Australia, I worked at Sherman Sterling, first for the London office and then the New York office. That was for me a dream come true because as Italian, as you can hear from my accent, I'm Italian. So going to New York was fantastic. It was going to the heart of finance. It was incredible. And there I did all different types of financing. I did the niche financing like art finance. I did shipping finance. I did a bit of capital markets, extremely large acquisitions, even some deals mentioned during presidential debates. So a very broad type of financing and extremely interesting. Before that, I was at Simmons & Simmons for about 8 years in Milan. There I started my career where financial crisis hit. So we did a lot of debt restructuring and acquisition finance. After that, it was the time there was a lot of focus from the European Union towards renewable energy. So a lot of project financing. So this is a little bit to summarize my experience that has been across Europe, United States, and now Australia. There are numerous trends in syndicate finance globally. On top of the list, I would mention sustainability-linked loans and green financing. And this trend gathers traction from interest from both borrowers, companies, investors, prioritizing environmental, social, and governance criteria. Another trend I would mention is digitalization and fintech solution. Big rise in that area to streamline the syndicate process, enhancing efficiency and transparency. Another two trends I would mention coming from the United States are direct lending and liability management transactions. Direct lending is a type of basically financing where there is a non-bank lenders providing financing directly to the borrower and therefore bypassing traditional banks. And this trend is driven by an interest toward high yields and flexibility direct lenders can offer. And regarding the other trends, liability management transactions, I'll simplify, but basically is a form of restructuring of the debt, bypassing a more formal bankruptcy or restructuring process. Now, what are we seeing in Australia? In Australia, we are definitely seeing these trends. Sustainability-linked loans, the Australian market is increasingly adopting this trend driven by regulatory pressure, but also an interest from investors towards more sustainable investments. Regarding the other trend, the rise of digitalization and fintech solutions, we are definitely seeing also this in Australia, again, to streamline the syndicate process, enhancing, as I was saying, efficiency and transparency. Regarding the other two trends that are extremely prominent in the United States, what I would mention is that they are not as prominent in Australia as they are overseas, but there is an interest. These instruments are, let's say, gradually adopted in Australia. Consider that Australia is a market that is constantly looking for innovative and flexible solutions. It's an always evolving market, so with appetite for this type of instruments. So let's see how it will go. Setting up structures in Australia has a number of nuances in the context of syndicate financing. First off, especially because we were talking with our friends at Perpetual, when there is a syndicate finance, there is a trust. And if there is a trust, there is a security trustee. Now, the security trustee is an intermediary between the borrowers and the lenders with the key role of holding the security interest on behalf of the lenders, enforcing the security interest in case of default of the borrower, and distributing the proceeds to the lenders following the enforcement. So the benefit for the lenders, it's clear, meaning that instead of individually enforcing the securities, they have an intermediary doing that for them. So definitely one of the key considerations to do when transacting in Australia is to find a reputable security trustee, someone you can trust, someone with an extensive knowledge of the market to help you navigate the complexities of it. And if I may say, also lawyers, because you need documentation that is clear. You need documents that set out very clearly the rights of the lenders, the responsibility of the security trustee. You need the security documents that create valid and enforceable security interests. So documents are obviously key for a successful transaction. The risk of default in Australia tends to be lower compared to other markets for a number of reasons, in my opinion. First of all, I would say the banking system. Australian banking system is highly regulated with stringent capital adequacy requirements and, in the opinion of many, robust monitor process. Now, the point of having a stable banking system is one of the factors of having, in my opinion, a healthy economy. And in fact, the second consideration I would say is that is around the Australian economy. Meaning, Australian economy has proven over the years to have strong performance and to be resilient. This is supported by incredible industries that are here in Australia: agriculture industry, mining industry, services. All these incredible industries create an economy that is strong, as I said, and therefore the risk of default in a strong economy is lower compared to other markets. And the third factor I would mention is again connected to the banking system. So here banks in Australia, when they work with the borrower to design the transaction, they look at their industry, they look at their business, they look at the actual company, therefore designing a financing instrument that is tailored to that borrower. It's a strict credit assessment, yes, but it allows to design, I think, a financing transaction where the company is able to meet its financial obligations in general. So these, I would say, are the three factors that create lower default rates in Australia compared to other markets. Australian tax regime for offshore lenders is generally comparable to, let's say, the major trading partners. There are a few considerations I would like to mention. One is around the interest withholding tax regime, which imposes withholding taxes on interest paid to non-residents. Now, and the standard rate is 10%. This is the tax. There are also a number of exemptions. More specifically, there is a public offer exemptions that is extremely important to know. So to summarize, when an instrument is offered to the public, it may benefit from a tax exemption. The second type of exemption from interest withholding tax regime is maybe contained in treaties. So Australia, as many other jurisdictions, enter into a number of double tax agreements with other with other countries. Subject to the terms of these agreements, there can be a full exemption from interest withholding tax, or maybe just a reduction. Still good to know, and of course here I'm summarizing, but at least you have a flavor. Regarding the other consideration I wanted to make around the tax regime in Australia, I would like to mention the thin capitalization rule. Companies very often, I guess everywhere in the world, prefer to finance their operation through debt instead of equity because there are a number of tax deduction of interest payments on debt. The thin capitalization rule limits the amount of debt the companies can use to finance their operations. To avoid thin capitalization, meaning having companies with too much debt compared to equity. This I'm simplifying, but to give a point. Now, in the context of in international context, the rules want basically to avoid that there is multinational debt dumped into Australia and maybe profits going elsewhere. Now, there are though 3 tests. So if the borrower the company meets one of the 3 tests, can still benefit from the deductions. Typically in international context, the test the companies will want to meet is the third-party debt. Now, I will stop here because it's an extremely complex matter, but the main point that I want to say is speak with an expert, speak with a tax lawyer, tax advisor, because there are, as everywhere in the world, a number of taxes, a number of rules, but there are also a number of exemptions. Therefore, it's good if you speak with an expert to design the most efficient tax solution for what's your vision.
As someone who has worked basically everywhere in the world, Europe, as mentioned, United States and now Australia, with friends everywhere and family everywhere. So my point is, you will find that Australian people are probably the nicest you will ever meet. Very little ego, typically involved, very little ego, but a lot of focus on the actual transaction, on what you want to do. So you will find people willing to help you putting in place your vision. So my suggestion is, if you have a vision, get in touch, and if you needed to hear that, it's time to do it.